Welcome to Family Investment. It's one of those really hard things. In fact, it's been going for 2-3 weeks. And it feels like a huge mega explosion, and it's not been great for many people because it's starting to get into the heads of retail investors. I don't care what happens to the hedge funds or the managers, but I do care about you guys, the retail investors, on feeling lost, what to do with all the string of information coming through, just disrupting, but it's just pushing us down. So if you guys recall, about 2 weeks on YouTube, I did say that the market is going to be a bit worse than we would expect because of the high bond and high gold. Something is cooking up with stock market at a high at the same time isn't right. All the stocks going 25% up one day, all those high risk stocks, people feel like it's Las Vegas again. And I came across, I was right. Though that thing happened, it came down, people took profit. But then what we never expected was the phase B, where we're pushing to correction territory. As of yesterday, we are on the stock market value price of the 1st of November 2024, and now we hit March, which is around about 4 or 5 months of gain wiped out. So let's talk about today, what to expect further on. Is the sale getting worse? Is it a real recession building up, or it's a tantrum in the market? Because they are different. Okay, now on the presentation, week 10. Let's go. So the agenda, I always speak macro, when's the bottom, and then obviously I'm going to speak on losers, winner, phase B and phase C, and what to expect. Okay, so Moody's, when we spoke last, it was pretty high. It's starting to come down. It was 5.19, now it's 5.23. So maybe it's stabilizing, waiting what to happen next. The sell-off has happened. It took a bit of pressure off the lid. So it's come down a little. Doesn't dictate where we're going next, but it's telling us that the decision is about to happen. Let the stock market sell off first. Gold price, the same peak. It's not going any lower. It's peaking. It's waiting. Gold buyers are waiting to see what's the next step. Are we getting this reset? Is this reset hitting hard? And when I say reset in the market, meaning all these gains that's been gained, either profits been taken or it shouldn't go higher when it's expected. When the reset happens, it rebalances out. At the moment, it's a major sell-off until the gold tells us where to go. And then here we have the VIX. People like the VIX. I also like the VIX, but the fact that the VIX is slowly choking us up in the market. When I say choke, it's slowly going up. That's the worst painful sell-off ever. VIX is like a volcano. It erupts, it climaxes, and then it comes down. But at the moment, it's just building its base. It's building its base. It's building its base. Is it going to get worse? We don't know, but it's not climaxing yet, and that's pretty scary. And then we have the carryover trade 2.0 possibility. Some claims that it's starting to happen. We've seen the US dollar fall, Japanese yen strengthening, US dollar falling. And then if the carry trade rolls in, it could get worse. That is where the market is. It's trying to portray some tantrum. It's trying to give us way advanced hint, and people are reacting ahead of time. And then here we go. The Nasdaq, we've wiped out 4 months of gain, now back to 1st of November 2024. I call it the phase A. Phase A, people taking profit and then see where we go, because things shouldn't go higher than it is, which is great news. Phase A executed, which is good for us. But unfortunately, we are in phase B just now, where we are going to correction territory. So if we lose, we've lost 2,000 points. If we lose another 2,000 points, we will be back in August the 5th, where we had the Japanese carryover trade, the Black Monday, the sudden huge drop from 18 to 16,000 in a very short period of time. So will that happen? If we lose another 2,000 points, that will push us into deep correction territory and very close to the mouth of the recession of 20% lost. Will that happen? All I can say is we are just in the beginning of phase B. I'm not trying to be a bad news bearer, but this is where we are. Okay, folks are claiming, saying, hey, we could bottom from here, but hey, calm down, calm down. Bottoming means positivity, things can change and things will roll out better. But no, this is just the beginning. phase B could get even worse. So I'm telling you guys to prepare. If you feel like you're choking, you're puking, upset stomach, you're throwing tantrum, a few folks, maybe they've lost it a bit. They're not angry at me, angry at the market, but they're reflecting the anger. Guys, it could get worse. So just chill. What to do? Let's get in deeper detail. But I want to emphasize that possibility there could be a phase C, where we could remove all the gains from 2023 and all the way down to 10,000. We still could have that possibility. Yeah, and the way things are going, tantrum are being thrown. So will we get an end of phase B and going to phase C? All I can say is the market is throwing a tantrum, meaning they're taking money out without planning what to do next. COVID, the 2007 crash, is something that we cannot avoid, meaning that we cannot save the banks, we cannot save the house's mortgage loan, we couldn't save and rectify COVID, and COVID had to hit, we had to shut down. Those things are the things that we cannot control. Those things comes down really rapidly. But we are at a tantrum situation where we could have controlled if certain people speak and negotiate, or certain people back off, or it's been instigated. Why is this tantrum going on? Because of high debt. After COVID, high inflation, debt is growing up. So countries are trying to defend themselves, and we have got war in Ukraine going on. Eggs are going up in prices. Even going out yesterday, we were looking at free-range chicken, and free-range chicken costs 3 times more than what it was before. Things are getting expensive. It needs to be rectified, or else things get worse. Okay? And it's beyond my control, beyond your control. And what can we control? We can only, as retail investors, control what we have in our stocks portfolio. Okay? In our portfolio, we can only control how we diversify the pyramid. This is where I stress to folks every single time. So for me, I have already sold most of my high-risk stocks. I'm trying to, or even zero high-risk stocks as was yesterday. High growth is where the high growth, and this is where the areas that I should be in. So I move my cash and moving it down to the base. Sell from top and then go to bottom, not bottom to top. You do not start selling your high-grade stocks like your Apple, your Microsoft, and all that stuff to buy your HIMS and your Palantir. That's the wrong way to do it. You're supposed to go defensive. Okay, when there's a flood coming, you go defensive. That's all I can say to many of you. But the thing that it's quite misleading sometimes on Twitter. People say Trump trade too. This is like a garbage news. Yeah, people just put this in for fun, thinking that we're masking, we're gonna get. Yeah, of course, I believe strongly with the technological wave, we will go higher than we were last peak. But to put a chart like this to mislead people to buy the falling knife is dangerous. It's very dangerous. So when you guys see stuff like this, don't. One guy with a huge account spread it, and 15 other guys with big accounts are spreading this type of chart to give positivity. But positivity is not shared this way. Positivity is shared on the basis of what you can control, buy the great quality stocks, and then wait for the next opportunity for the business to grow again, because we're investing in business. We're not investing in the market. We're investing in the business. Okay. So winners and losers, Alex, what do? I have brought in my new buytrigger 2.0. I'm not trying to sell to anyone, but the buytrigger 2.0 is helping me to see how the market is. AVGO has done well. AVGO previously I gave a valuation around about more than 220, 230, but with the high bond yield and the market situation, negativity, I have the system has calculated the macro and brought the valuation down. The growth will, if we stay this way, the growth will go slower. So with AVGO now at 200 after hours, I think it's fair value. For those who chase, then be careful. Remember, we're not in a bullish market condition just now. We are in a tantrum profit-taking phase B. Some stocks will do well and some stocks will not do well. Block, for example, will not do well in a market with this conditionally squeeze. They will go down. And I think my valuation before was the triple figure over 100. Now it's dropping. With the market squeeze, the valuation of company like Block will go lower. However, with high cash flow, high EBITDA, Meta seems to do well. It seems to have a valuation that's gone up. So that's where I'm coming from. Certain stocks will do well and certain stocks will struggle. And then lastly, I put Caterpillar. High cash flow could be a condition, and Caterpillar could be one of those that comes slightly down. Before it was over 300, now valuation is lower. So this is where I'm coming from. The market is throwing a tantrum, and we have to evaluate our portfolio and look at the stocks differently. So trying to speculate is hard this time, but you can control your portfolio. I cannot ask you to stop screaming and shouting. It's perfectly normal. I've gone through it far too many times, so I'm going to show this now, because the one where I really scream and shout is for now. We should be okay. Things can flatten out, ease up, but even if there's a rebound, I'll still be worried. Why? Because of the high debt going on. So this reset needs to play out more favorable. Hope to share soon. Give out more information this session today. Thank you. Goodbye. Family investment. See you.